Many folks have the unfortunate misperception that reverse mortgages are only for those in desperate need. This could not be further from the truth. And although it can be a lifeline for those who are in need, the fact of the matter is a majority of reverse mortgage borrowers are utilizing the reverse mortgage more as a retirement account rather than a desperate attempt to get money. They see the reverse mortgage as a way to increase cash flow and reduce financial risk in retirement. Because let's face it, unless you have millions upon millions of dollars in your retirement portfolio, you face many financial risks in retirement. One of the biggest risks being running out of money. And if used properly, a reverse mortgage is a great way to help mitigate that risk along with many others. So in today's video, we're going to discuss the many different ways a reverse mortgage does this. And if you stick around till the end, we're also going to talk about some interesting research about reverse mortgages that shows how it can positively benefit your retirement outcome for yourself as well as your heirs. Hi everyone, my name is Taryn Proctor. I am the president of Retirement Home Equity Advisors and am a reverse mortgage expert. I solely specialize in reverse mortgage financing and create videos like this every week to help spread my knowledge of this product to you, as it is a fairly complex financial tool that is highly misunderstood and in some cases misused. So hopefully you gain some helpful knowledge today, and if you do, let me know by giving the video a thumbs up and head on over to my channel to subscribe. While you're over there, you'll see many other videos that you'll certainly want to watch as I go over so many different aspects of this loan. The main goal of these videos is to help you get as good of an understanding about this product as you can so that you are positioned to make the most well-informed decisions about this type of financing at the end of the day. And I found the best way to do that is through these educational videos, so I hope you enjoy. All right. So how does a reverse mortgage help mitigate financial risk in retirement? Well, we've always been told that during your working years, the goal is to acquire as many assets as possible. This is considered the accumulation phase, as some may call it. And the purpose of this phase is so when you get to retirement age, you can begin liquidating the assets that you've accumulated for all of those years, which then begins the distribution phase, where you begin to distribute your assets to sustain yourself during your retirement. The problem is, a good chunk of retirees have little retirement savings to begin with, and those that do face dwindling and less valuable retirement accounts due to inflation and stock market volatility. So what do? Well, a majority of Americans aged 65 or older have a disproportionate amount of their wealth tied up in their home equity, which is just a fancy way of saying that a majority of your money is locked up in your home with very few ways to get access to it. Now, one thing I've always found super interesting is we pay into our 401ks, IRAs, some pensions, our whole lives. But for a majority of Americans, the largest asset they own is their home. They've been paying into that for years and years as well, but yet the home and the equity that is built up in it is not even considered in the retirement planning conversation. Why? And truthfully, the main reason would seem to be because in our society, the house is something that we of course want to leave to our children. And what so many people out there don't realize is if you utilize a reverse mortgage strategically, not only is it likely you can have both the benefits of a reverse mortgage and the ability to leave an inheritance to your children, but in some cases, you could wind up leaving them more of an inheritance than if you had never done a reverse mortgage in the first place. We'll get into that in a bit. So how does a reverse mortgage help you mitigate financial risk in retirement? Well, for starters, it immediately increases your cash flow, which in retirement is absolutely key. And it does this by, number one, eliminating your monthly mortgage payment, and two, by possibly giving you access to a tax-free growing line of credit that has incredible strategic potential. If you missed my video on this line of credit, I'll put a link to that video in the description of this one, so you can go learn more about that feature of the loan after this. Now, it isn't simply the increasing of cash flow that is going to magically make all financial risk in retirement disappear. And although you could simply just get a reverse mortgage, eliminate your monthly mortgage payment, get a line of credit for emergency purposes, and have that be the end of it, for many people, that is enough financial security. But this video is about that extra mile the reverse mortgage can go for you. And that extra mile would be you strategically using the reverse mortgage as either a means of preserving your other retirement assets or putting the additional cash flow you now have to better use, thus reducing your financial risk throughout your retirement. Let's go over both of these options. Number one, using the reverse mortgage as a means of preserving your other retirement accounts. How can you do this? Well, right now, we're in a pretty bad spot when it comes to the stock market declining. I'm sure those of you watching with money invested in the market in 401ks or IRAs are sickened every time you see your monthly or quarterly statement showing the losses you're taking right now. For those who are still working, this isn't a big problem because many of us have time for those losses to recover. But for those who are currently or nearing retirement, this is detrimental, as this is the money you are typically going to be or are living off of. And now you're in a position to where you're selling those assets at a loss because how else are you going to sustain yourself? And the problem is even further compounded by the fact that in many cases, you still have to pay taxes on those funds. But with a reverse mortgage, if you were to set up that growing line of credit I mentioned earlier and only draw on that credit line during downtimes in the market such as this would prevent you from having to sell those assets at a loss and would allow your invested accounts the time they needed to recover, all the while having that money from the reverse mortgage credit line be tax-free. And yes, I understand that there are costs and interest associated with a reverse mortgage, which is absolutely something everyone should take into consideration. But there are also major costs in selling your assets at a loss while the market is in decline. Not only are you selling at a loss, but you are also taking money out of that account and eliminating its ability for any future growth. That's why for this particular strategy, in many cases, results in the cost of the reverse mortgage being far less than the cost or damage that is being done to your retirement portfolio as you continue selling at a loss month over month. Now, secondly, putting the reverse mortgage tax-free proceeds to better use. How could one do this? The answers to this question are truly limitless. And really at its core, the real question is, how can you use the tax-free proceeds from a reverse mortgage to make you more money? Let's break down a few different options. Purchasing an investment property is a popular choice. I've had multiple clients get a reverse mortgage specifically to purchase an income-producing property. Now, of course, with this scenario, you have the reverse mortgage, which is incurring interest and had costs associated with the loan, but you now also have a passive income-producing property in which someone is paying the mortgage off for you, and the home is typically appreciating quicker than the reverse mortgage loan, which means you are financially coming out on top. Next, you could use the reverse mortgage proceeds to reduce your taxable income. Let's say you're usually in the 24% tax bracket. Well, if you halted a portion of your taxable payments from your normal retirement income and instead took that money from the reverse mortgage credit line, you land yourself in a lower tax bracket for the year, thus immediately saving on taxes, but also not pulling as much out of those invested accounts to allow them time to continue growing or even recovering from market conditions. Some folks purchase a life insurance policy with a portion of the reverse mortgage proceeds. This ensures their heirs have a lump sum after their passing to help pay the reverse mortgage debt off, and also may have some financial benefit prior to death as well. I've seen folks utilize the tax-free reverse mortgage proceeds to help them start a business they have always wanted to. Or lastly, just using those proceeds for any other type of financial investment. And these are just a few of many different creative ways you could use this loan strategically and to your benefit. You see, the potential is absolutely there. Unfortunately, we've all been a bit jaded by the negative stigma of reverse mortgages, and that is difficult to see past. Finally, I promised you all at the beginning of this video that we would discuss some interesting research about reverse mortgages that shows how it can positively benefit your retirement outcome for yourself as well as your heirs. There is a gentleman by the name of Dr. Wade Pfau who holds a doctorate of economics from Princeton University and is also a CFA and RICP, which are basically pretty impressive financial planning designations. CFA stands for Chartered Financial Analyst. This is someone who specializes in advanced investment analysis. And RICP stands for Retirement Income Certified Professional, which is someone who focuses on retirement financial planning. Dr. Pfau is also a professor of retirement income at the American College of Financial Services, as well as the co-director of the college's Center for Retirement Income. And I think most importantly for you to know is that Dr. Pfau is not a reverse mortgage originator, nor is he the only bright retirement income mind who has his eyes set on reverse mortgage research and the benefits. He is just a retirement income professor and researcher who has published more than 60 peer-reviewed research articles in a wide variety of academic and practitioner journals. With all that said, Dr. Pfau has been researching reverse mortgages for some time, and what his research has concluded time and time again is this: that when the reverse mortgage is responsibly used early in retirement and in coordination with the rest of the retirement assets, in most cases, not all, but overwhelmingly and consistently, the reverse mortgage not only allows you to better meet your financial goals, but also preserves the most assets for your heirs at the end as well. Please feel free to look up Dr. Pfau's research online if you have some time. It's very eye-opening and intriguing. And that's it for today, folks. So if you or someone you know has questions about today's topic or about reverse mortgages in general, I'm always here to help. You can give me a call anytime at 888-982-0475. And as always, I hope you all have a great rest of the week, and I'll look forward to seeing you next week. Take care.